independently and all their own sort of risk weight assessments. And so when you actually look over time, over the past 10 years, you see they're expanding their balance sheets massively over the past 10 years, but their so-called risk-weighted assets supposedly are going down in time up until the financial crisis. And of course, we know that's rubbish. They weren't really, becoming far less risky up until 2007. So I would be very cautious that capital adequacy requirements, whilst are important, aren't going to give you fundamental reform.
Okay, Mel, 2 minutes, please.
I'm going to try and come back on a few points by starting with the points made by the woman in black over here about saying that Greece, what's happening in Greece has nothing to do with investment policies. And on one level, no, but on another level, well, if you look at the kind of the values that are informing all the different parts of the financial sector, all the different strands and the ways that things happen, then actually they do. And what our question has been is, do these things serve the public good? No, and in that way, you can kind of bring in different aspects of that whole bigger structure. So another example that I could have taken in looking at this stuff is a piece we've done recently on BP evading or getting tax breaks from the government when other renewables-based stuff aren't getting any support whatsoever. And so in this way, I think what we have to do is sort of recognise, well, how can we break down this whole system in the ways that people have suggested by referring to credit unions and mutualisation and ethical banks as well. How can we look at each aspect of what's going on here to take back that ownership and that control for the public good, and to fully recognise that public good has to mean environmental and ecological good, because without a planet we're not really that not going to happen on any level. So I think I'll leave it there rather than trying to dive into anything else too much. But just
Catherine, 2 minutes.
Yeah, okay. I think we all, on behalf of the whole panel, apologise for the fact we obviously aren't going to pick up on, there were loads of really interesting points. So I'm just going to pick a couple. Several people raised the whole question of fees and commissions, which is just deserves a massive battle because it's a hugely pernicious problem. First of all, it's a terrible con, but second of all, it does tend to encourage the wrong kinds of risk-taking behaviours on the part of financial intermediaries. So it is something that we're focused on, beginning to get more focused on at Fair Pensions. It's a huge story, and of course it's a tricky one because these charges are often incredibly well concealed and hidden, and winkling them out and working out what's going on is in itself a very significant challenge and quite beyond the financial literacy of even very smart people, let alone most people in our economy who are nevertheless being ripped off. I loved your question about whether banking even deserves to be called an industry. It's certainly not a normal industry in the sense that there are these huge subsidies underwriting it from the taxpayer, and yet there's no quid pro quo around the behaviours of banks, either in relation to the kind of battles that Mel's been having, fueling banks lending, completely undermining fossil fuel activity, but in many other ways. And it's just a little parallel on that is that the government subsidises the pensions industry to a huge extent by there are very, very significant tax subsidies to encourage pension savings. Now that's a good thing, I think, because it does make sense to encourage people to save for the future. But then there's no quid pro quo at all about whether any of that subsidised pension savings should flow into things which are pro-social and pro-positive ecological activity in the economy. It's just then completely a question of where can you get the fastest buck anywhere all over the globe. So, I mean, I don't want to see the sort of huge hand of the state coming down on all of these things, but there are some really important questions about whether the state in subsidising these, both the pensions industry and the banking industry, should be asking a bit more of what then goes on to make sure that it is basically supporting things that society needs and wants. And then just a quick one on, do we need more bankers involved? I mean, you can see, well, we do have an ex-Goldman Sachs person on the panel, and you've got a pension trustee on the panel, but basically, yes and no. The people that really head up these industries do fight very hard for the self-interest of their individual institutions and often driven by their own bonuses. But of course there are brilliant people who have huge insight and great kind of moral courage inside of all these industries, and we absolutely have to be reaching out and finding common cause and finding ways for those people's voice, whether it's openly or discreetly, to get an outlet and inform the debate nationally.
Thank you. Okay, well, to end now, thank you all so much for all of your contributions. If this Good Banking campaign is to be a success, if the Good Banking Forum is to achieve what we want, then it is going to need all the involvement of you in the room. So if you have expertise, if you have ideas, please do email us at the Compass office and offer your help. We will be launching a series of actions over the summer, so at the very least, please do take part in those. All that remains me to say is to thank Lydia, Mel and Catherine for their brilliant and informative contributions here this morning, and thank you for coming along to this session.